Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll be your guide through the stock sectors for this week, June 4th, 2023. Just a quick reminder before we get started, we are not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. We're going to make personalized recommendations. All markets do involve risk of loss. Do not trade with money you can't afford to lose. And we are not subject to trading restrictions. We got a position in a security or initiate one at any time. Please stay in touch with me. You can always email me at brandonwendell.cmt@gmail.com. That way you can give me some requests. If you got any questions about anything you'd like me to talk about, let me know. I'm also very active on Twitter. You can follow me at TraderBdub. And if you could hit the like and subscribe buttons for the video here, it helps us out a lot. Make sure people are following us. And you can also get the alerts to let you know when new videos will be coming out as well on a weekly basis. Anyway, we're going to take a look at the stock market and sector performance for the week of June 4th going forward, what's likely to happen. And I've got a couple trade ideas as well. So looking at the last 6 months, you can see this looks like a bull market for the most part. I mean, yeah, we got a lot going down, but technology and communication services are rallying. That's actually a little troubling. Those are normally the bullish sectors at the beginning of a bull market, but unfortunately, they're the only markets that are rallying. Even taking a look at the last week, we got a little bit of a reprieve, a little bit of a rally here, except for the staples, which again, that's a bearish market indicator if you get the staples running. So the problem is you've got everything concentrated in one sector trying to drive the market up. The NASDAQ, if you take a look at my other video on the indexes, you see the NASDAQ is separated from everything else. When that happens, you usually get a trend change. So this is warning us that there may be a trend change on the horizon for the broad market. So taking a look at the XLY, consumer discretionary, we actually did have enough bullish pressure to go deep into the supply zone, and we might actually be able to break it. I mean, we stalled out, obviously, just prior to the supply, but now we picked up more momentum than we've had before, so that's a bullish sign, and we may continue to see more discretionary purchases and a push upwards in that sector if the NASDAQ gets the other markets to continue to go with it. The communication sector also very, very strong. We had a little bit of a warning back here. We had the negative divergence, but we couldn't close below 40, and that was very bullish, and we've been pushing up ever since. Next upside target is 64.13. We could even exceed that this week. In the technology sector, also extremely bullish, we are seeing a little bit of weakness on the end here. So, if we see a push to the upside on this week, basically if we break out above the prior high from last week, we need more momentum. If we have less momentum, look for a retracement in this market. We could go as low as 160 before we push up towards that 172. In the materials sector, kind of a surprise here. We had a big gap up on Friday out of nowhere. We had already hit our first projection target, and I guess we're retracing a little bit. It'll be interesting to see if the 79 area acts as a bit of supply. That's where we gap down from. When you gap up into supply, you usually get a pretty good move back down. So this could turn around very quickly, or, again, if we can stay above this gap or push higher to new highs, we need the RSI to go above 60. If the RSI doesn't go above 60 as we're trying to push higher, then we're going to fail and have a pretty big drop. Looking at the energy sector, it's kind of interesting. We did make a new low. We had a positive divergence that led to a pullback here, little correction. Okay, so with the energy markets, again, we got a new low here with the more, a little bit bearish momentum. We were below 40, but we were higher than we were before. So positive divergence again, we got another pullback. But with this low coming from below 40, we should not be able to breach this high without some sort of pullback first. So look for that pullback this week. Looking at consumer staples, this thing turned very bearish. It was kind of a surprise. I thought it was just going to be a correction. But you can see that as soon as we broke 40 on the RSI, we just dropped. Now we're getting a little bit of a correction. There could be a shorting opportunity from 75.40 all the way down to that 69.08. There's really no demand to hold this up. So it depends on how far this retracement goes, but I would love to be able to take a short at this point and target that lower demand. Either way, if the market continues to rally, consumer staples are not something that you want to buy. It's a shorting opportunity typically. This usually performs well when the markets are going down as a safety. And same thing with healthcare. You can see we are retracing a little bit after we overshot our demand and bounced. And we're still very, very bearish. So we're coming into supply. Once again, that's a good shorting opportunity potentially. 131.13 to 132.36, shorting, targeting the 125 projection after this little retracement. And as long as we're below 60 on the RSI as we hit supply, we should be okay to short there. If we happen to go above 60 on the RSI, then do not short because it means there's too much momentum. We could go higher. Looking at XLU, the utility sector, also very, very bearish. We got a supply zone that formed here. And this was kind of the death knell where we made a high that was below 60 on the RSI, ended up dropping and getting below 40. So we're still very bearish here. Could just be a basing before we continue to drop towards that weekly demand of 60.32. But this looks like a sector that's on its way down. It does not perform well in higher interest rate environments anyway. And financials looking a little crazy back and forth. We had a bunch of news on those. They sank and then they just stabilized. So not a whole lot going on here. We're just kind of back and forth. We may try to pop up into the 50% retracement, 30, 33, 32. But we need to get momentum above 60 and have a candle close above 60 with the RSI there. If it doesn't, if the candle moves up and we close, but the RSI is not above 60, it's a fake breakout and we should come down very quickly. If we do close above 60 with the RSI, and there's a candle that closes, and the RSI is above 60, then expect us to continue to climb up, possibly towards 35 would be that upside target. And finally, real estate for the sector is still going down. We made a new low, and we have plenty of bearish momentum, so we're moving up. This may act as a little bit of a barrier to price, just above 37 right here. You got that basing and drop that we came from, so we could turn around in that area. So I'm not seeing this as a good sector to be long. Looks more like some shorting opportunities coming in as the real estate sector softening. So follow up on some previous trade ideas. We had EPAM on the 4-hour chart, and unfortunately never got to the entry. It's already hit target 1, so I don't bother trading those. If they've already hit target, it's unlikely to come all the way back into that entry point. This may become a demand that we could use. It got dropped, 4 basing candles in a rally, but it's going to take a while to get down there first. So moving on, we got Amazon that has a trade idea. As you can see, it pulled back, but not into our entry point, and it just took off without us. So again, no opportunity. We got to pass on that one and throw out the trade. So for some new trade ideas for this week, we have Dexcom Inc. For the last, 10 years, it has run up 100% of the time. Every single year, the average return is 9.45% on Dexcom. So looking at the 4-hour chart of DXCM, right here, you can see we're already moving up quite well, but we do have a rally-based rally demand zone back here, 116.33, 117.84, with the stop loss just below that, targeting a couple of projections, 123.91 and then 127.67 is my second target. So hopefully we'll be able to play that one this week. And PPL Corporation, with this, 90% of the time it's gone down for the last 10 years, as you can see. The average return to about 2.75% to the downside. So looking for a rally into our supply on this 4-hour time frame, 26.87 to 27.24 with a stop about 27.32. And again, I got projections at 24.90 and 23.67 for my targets on the downside short. So that's what I got for you this week. If you got any questions, please hit me up on the email, brandonwendell.cmt@gmail.com. You are more than welcome to follow me, and please do on Twitter @TraderBDub. You can always converse with me there and follow me there. And of course, please hit the like and subscribe button for the Wendell Effect. Make sure you watch our videos on a regular basis, and you can get notifications for the new ones that come out as well. So I want to thank you for spending your time with me. I appreciate it. Take care, trade well, trade safe, and see you soon.